Do you believe that the price of Tesla stock will increase quickly, perhaps even doubling? You would not want to miss this information as Tesla stock plunges 50 in 2024. Tesla stock is down 44 in 2024 as enthusiasm for the electric vehicle company wanes. However, some people are still hopeful that Tesla stock would eventually double from its present valuation at approximately a 150 per share. The majority of Tesla. Analysts tracked by Bloomberg believe that Tesla stock is a buyer equivalent, and the shares would need to rally a whopping 57% to hit the average analyst price. This year, analysts increasingly say that the EV company stock is a buy despite all the challenges Tesla has faced. Wall Street has primarily stayed bullish. Gold cost the stock is now priced at 31 times anticipated earnings, down from over 200 times in early 2021 due to this year's downturn. But a few days ago, Tesla shares hit a new 2-year low, defying general market trends. Despite Tesla's denial of earlier reports suggesting manufacturing, investors are nonetheless anxious about the company's operations, notably in China. Cuts in the largest auto market in the world, while the EV manufacturer unveiled its electric commercial truck on December 1st in the Tesla. Semi-starter production failed to spur the stock's decline, which has occurred 5 times in the last 7 sessions. Recall that Tesla Bear raised awareness of the company's recent pricing reductions for cars sold in China and the United States, claiming that these reductions indicated a potential demand issue that might extend into 2024 and reduce the number of electric vehicles sold. Makers' margins are strong in spite of difficulties, including declining demand and pricing. China's cuts the only manufacturer of electric vehicles that Morgan Stanley covers that makes money off of sales is Tesla. The analyst, Adam Jonas, wrote a note in which he reiterated his target price of $330 in the United States. This is more than twice as much as Tesla's current valuation, which is around $150 per share. Notably, Tesla's stock has lost 53% so far this year compared to the SP 500 index's losses of about 16%. If the current trend continues, 2024 will be the worst year for Tesla shares ever. The stock has dropped by nearly 60% from its record close of $409.99 hit on November 4, 2021, and is down 58 from its 52-week closing high of $399.93 on January 3. Analysts believe that Tesla shares will only continue to decline from here as Elon Musk, inflation, and competition will take their toll. Contentious Elon Musk, the CEO of Tesla, has long been seen as a significant risk. This so-called Musk risk has been dragging on Tesla's price, but it recently escalated when Musk sparked even more controversy and caused the company's shares to plummet. The SP 500 index and NASDAQ 100 indexes declined less than 3%. Looking back, the performance is even worse, with the shares plunging 43% so far this quarter as well. Prominent Wall Street analysts have lowered their expectations for Elon Musk's company and the electric vehicle industry as a whole due to the intense sell-off that has pushed Tesla's stock price below $500 billion for the first time in more than 2 years. Goldman Sachs and RBC Capital Markets slashed their price targets for the stock after Musk raised eyebrows by selling nearly $3.6 billion worth of Tesla stock. According to a regulatory disclosure made public, Musk sold nearly 22 million Tesla shares over the course of 3 days, ending on December 14, so the news of his recent sale was hardly shocking. Since the company's stock peaked in November 2021, Musk has sold more than $39 billion worth of Tesla shares. Uncertainty surrounded Musk's decision to sell more Tesla stock, and the company declined to comment. The world's most valuable automaker by value, Tesla, has lost more than $700 billion in market capitalization since its peak. Nevertheless, Musk took to Twitter to warn against taking on debt in volatile macroeconomic conditions, particularly when the Federal Reserve continues to raise interest rates. Additionally, Musk lost his position as the richest person in the world when he descended from the top of the Bloomberg Billionaires Index. His controversial handling of Twitter's social media policies further alienated some of Tesla's customers when he suspended the accounts of prominent journalists from publications like Washington Post and the New York Times. I believe that the stock price will continue to decline from here. At Fernwood Investment Management, Catherine Faddis is a senior portfolio manager. With this Twitter venture and all of the bad news, Elon Musk has tarnished his reputation at a time when worries about the economy and a recession in 2019 are only intensifying. The market for Tesla's pricey electric automobiles probably going to decline given its outlook, although there is a possibility of a slowdown. Some investors are still optimistic about Tesla despite its recent setbacks. Morgan Stanley, an investment management and financial services company, named Tesla one of its 3 top picks for the year. Despite Tesla's recent struggles with its stock valuation, many analysts still see the automaker stock as an opportunity for value growth, weighing as high inflation and rising interest rates have. Demand from consumers reluctant to spend on big ticket items in addition to keeping its target price for Tesla at $330, Morgan Stanley expressed optimism about the company, noting that we see 2024 as a challenging year for the EV market categorically. Given Tesla's current valuation of about $150 per share, a $330 valuation that is more than double its current price, we believe the company's competitive advantage may grow. At $176, the price target set by Citi, analyst Type Shelley, who recently upgraded the company, is among the lowest on the market. Although Tesla's stock may have taken a beating this year, despite Elon Musk's reservations about them in the past, the company has developed a rather surprising group of supporters. The analyst said he was turning more positive because Tesla's slump means that some of the overly bullish expect rotations in the stock, including on unit sales, had now been priced out. A notable 37% drop in Tesla shares since late September has occurred, in part due to recession fears. Increasing interest rates and the fallout from CEO Elon Musk's purchase of Twitter, the enormous decline in Tesla shares, appears to be the cause of securities analysts' bet that the sell-off has gone too far. According to Bloomberg News, over 60 of analysts now advise purchasing Tesla stock, the largest percentage since early 2015. These ratings have increased consistently this year as well. Senior portfolio manager Catherine Fettis of Fernwood Investment Management offered her insights on the subject, saying, "I know Tesla bulls are loading up at these levels." According to Faxi, this does not imply that Wall Street agrees with everyone else about Tesla stock. In fact, according to Bloomberg, over 27 of analysts still rate Tesla shares as a hold, and another 13 still have a sell rating. However, retail investors have increased their stake in Tesla despite the e-maker's decline. According to data from Vonda Research, Tesla was second only to the Spider ESP 500 ETF in the list of the most purchased securities this year, at least in terms of the number of days at the top. This is encouraging for the e-maker, particularly since Tesla retail investors have established a solid understanding of the company's fundamentals. This was previously brought up by Tesla CEO Elon Musk, who also said that average investors have more understanding than Wall Street. In addition, Tesla continued to develop rapidly and set new delivery records in 2022 in regions like Europe. Despite economic headwinds, sales of electric vehicles increased in the third quarter. Given that Tesla is one of the most actively traded stocks, investors are curious about where the company will end the year. The price of Tesla is expected to rise by the end of the year, according to a coin price projection that employs data science and machine learning technology for equities, cryptocurrencies. Notably, Tesla began 2022 at 352.26, and it is anticipated that trading will stop on December 30th. Even though it may not seem like much, the increase from now to the end of the year by 10 is $185, and it is predicted to rise even further by the end of the following year. If you want to enjoy twice as much Tesla stock information, subscribe to our channel.